We're slamming the brakes on a global economy. What are we modeling in the financial sector right now with price action like this?
It's very difficult, John. Obviously, it's a very volatile time period that we're all going through, as you've pointed out with those numbers in terms of the percent changes today in particular. The downside on these names is quite dramatic. And I think you touched on it, which is, the profitability of the sector clearly is going to be reduced. And the uncertainty for investors is how much, is the reduction in earnings estimates, do they need to come down another 10, 20, 30, 40%? We really don't know yet. But at this point in the environment, we believe this is not a balance sheet issue. It's an earnings issue. And as you touched on, these banks, the fortress balance sheet of a J.P. Morgan and others, it truly are. The industry has got the best capital levels and liquidity levels that we've seen in decades.
Gerard, I'll ask this question as calmly as possible because it needs to be asked. Draw a distinction between an earnings issue and a balance sheet issue. And at the moment, quite clearly, your base case is it's an earnings issue. And for many people watching this programme, they share that view. What would change that view, Gerard, for you? How much worse would things need to get to start to rethink that base case, which seems to be at the moment totally insulated from everything going on around it?
It's a really good question, and it really turns into, will we get into a recession that extends out into 2021? And if we get into a recession as a result of the actions that are being taken to contain the COVID coronavirus, if those actions lead to a downturn that is not short-lived, which is what I believe most people are expecting, us included, and that we actually see, a contraction in the U.S. real GDP numbers from not just the second quarter of 2020, but continuously well into 2021, that to me would be a scenario where this could turn into a balance sheet problem.
Gerard, let's hope we don't get there, and for the moment, we're nowhere near. So let's talk about the capital return program of some of these big banks. J.P. Morgan, Bank of America, basically hitting pause on buybacks through Q2. I want to understand from you, which has been a huge pillar of support for this sector over the last couple of years, massive buybacks, big dividends, whether they come back online once this health crisis fades, or whether this transforms corporate behaviour for quite a long while still to come.
It's going to be interesting because the reason the banks have used the stock repurchase programs and the dividend increases is, as you know from our conversations in the past, the industry earns an enormous amount of money on their capital, and there's not enough places to put it to grow organically at rates of return that you and I would find acceptable. So as a result, some of these banks are prohibited from acquiring other banks due to their deposit market shares. So the names like J.P. Morgan or Bank of America, these companies have to give the money back to shareholders because there's no other place to put it. The suspension of these buybacks has changed that, obviously, in anticipation that there will be a greater need for funding to get companies and individuals through this short-term downturn, hoping it is a short-term downturn.
Gerard, just a final question about the industry. And I know this is not apples and apples, but yesterday the Federal Reserve essentially threw the towel in on projections. We won't get a summary of economic projections from the Federal Reserve for this coming quarter, for the coming few years. They may restart that again in June. Nobody can model this. For the analyst community right now, don't you just have to think about suspending coverage for the time being? How can you actually put a rating on any of these companies with a price target whatsoever when we know so little about the future?
John, you bring up a very interesting point. I mean, that is certainly something that might have to be considered. And when you look at the near term, it is very challenging because none of us have ever gone through this, obviously. The economic consequences of the actions that are being taken to prevent the spread of the virus are unprecedented in anyone's lifetimes. So you bring up a good discussion point that may be pursued as we get into this a little further.